There are serious consequences for attempting to stop the business cycle from functioning. The system needs an economic detox, and yet it's just getting more of the same garbage fed to it every single day. The problem is only compounded. The danger is only mounting. The desire to create a bigger bubble is not to help people, help the retirement accounts, and help Main Street. It's specifically to cause the biggest collapse possible to effect massive change, further erode the middle class, and enrich the elite. But hey, who cares, right? You came here for the truth, so let me unveil that for you. You came here for a dose of reality. Sometimes it really hurts, sometimes it stings, but you want to get the information so that you can be better prepared, so that you can decide what you want to do. You know today, no matter what walk of life you are in, that there are extreme scenarios that are taking place. Look at the economy, look at certain areas. San Francisco, an extreme example where you have people on the streets, you know the situation, it's not very good. And then you have the Silicon Valley boys who are doing some wild and crazy things. Take a look at all of the stock markets like the Silicon Valley companies, compare them with the general market, an equal weighted look at this market, you get a completely different picture. So you know that there are these extremes today, and you don't have to be a genius, you don't have to be a soothsayer in order to look at all of the information. I'm bringing it to you today. We're going to talk about the stock market. I'm going to show you how extreme this has gotten to at this time right here, 2020. And then we're going to talk about economic aspects as well. I've got some information that I do believe is really critical today. Let's begin. Goldman warns of more job losses with jumbo mergers on the rise. You know, if you've worked for one of these big establishments, how this operates. They come in, they basically eviscerate what was there previously. They might let everybody stay for a period of time as they bring people in, some consultants. They look around and they think to themselves, well, we really don't need that guy. And how long has that guy been there for? And they might package people out. They might give them a severance, but they weren't necessarily ready to retire. That person was working there for 10 years, for 20 years, and now they're kicked to the curb. That person might be 40 years old, 50 years old. It's not so easy for them to get a job in these cases. They're working in the financial industry. They're not young anymore. They were comfortable in that position. They've worked their way up. They had some seniority, and suddenly everything was taken out from under them. I have seen this with my own eyes many, many different times. These big corporations operate cutthroat. They don't care about the people. Obviously, that's the way that they operate. Corporate profits are the number one thing. This is going to be the case right now. If you look at it back, let's say 2009 and onward, big M&A deals were happening, and it continues until today, of course. But you always see that when there is weakness, you're going to have these big players who come in and buy up a whole bunch of companies. As a result, they kick a bunch of people to the curb. It is inevitable. Wall Street's top matchmaker for mega deals sees a wave of corporate takeovers coming, with a worrying implication for the workforce: a jump in job losses. Politicians are going to be faced with the uncomfortable reality that you're going to have more big businesses doing better, and that there's going to be more losses of jobs along the way. You are going to see a fairly sizable amount of large cap M&A coming, with stronger, healthier companies being the acquirer and taking advantage of the weaknesses in their industry or elsewhere. This may not necessarily be so heavy in 2020, but look for it 2021 for sure. I've been highlighting this issue right now, particularly in the United States. We're talking about the food banks, we're talking about poverty and homelessness and everything else that has really rapidly increased while we have been told that it's a V-shaped recovery, which certainly it has been when you look at the tech stocks. But regardless, the lines are long and the need is enormous. More than 1 million New Yorkers can't afford food, and standing on long lines at food banks is now too common. famine. An estimated 1.5 million New Yorkers cannot afford food. It is just unbelievable to see the disparity where you have billionaires row, and then you have 1.5 million people who can't afford food. Now, maybe that number is too high. Maybe there are people who can't afford it, but they're just trying to push the limits and get some free food while they can. I'm sure that's going on, but you know that the numbers are staggering regardless. Rampant shoplifting leads to another Walgreens closing in San Francisco. Think to yourself for a moment that a store had to close, not just one, but multiple stores had to close because people were coming in, taking stuff, and not paying for it. This is San Francisco, which is why I brought it up a few minutes ago, talking about Silicon Valley, trillion-dollar companies, mega billion-dollar companies, and then a severe lack of prosperity for so many. Apartment rents are plunging in the world's richest cities. It's time for you to negotiate. Desire for space and stuck-at-home students weigh on formerly desirable areas, but for how long? In the world's big financial centers from New York to Toronto to London to Sydney, rents for inner-city apartments are plunging. This is a good thing for renters, obviously, but the landlords who have been buying in at these high prices along the way, as this market has been rising, people have been buying, and they've been renting out at a certain price. They've been estimating how their payments are going to be made based on these rents. Then they run into the situation where the rent is down 10%, the rent is down 20% in some cases, maybe even more. That's going to affect their bottom line. Maybe they're going to have to sell the property. If it's a bigger place, it's an apartment complex or what have you, multifamily, maybe a large establishment will be buying it up, and that will be actually worse off for the tenant perhaps. So I'm interested to see where this goes. As you know, I like to cover information related to freight, related to shipping, related to imports and exports, following the economy on all different levels. Quote, the ships are 100% full. The containers are 100% full. You can't get a container built. You can't pick up a ship from the spot market. The whole container shipping cycle is at absolute full pelt. The ports are getting jammed up now. We're starting to see bottlenecks in the supply chain. That's another challenge going into this winter. Now, this is the fourth quarter of the year where typically we do see this kind of increase, but it is, I would say, a good sign that products are moving in and out. So as I have said, with freight, with shipping, right now today, it seems to be very spotty. We look at certain indicators, they're moving up, they're in recovery mode. Others are looking terrible. I want to bring both sides of this to you, despite what some say about me. I am simply reporting on what I see. I want to show you what's going on with the markets, with the extreme overvaluations that we are noticing that is very clear to anybody that's paying attention. I've got several charts here from Real Investment Advice. They pulled this up, and always they give a breakdown, a great rundown of what's happening on the technical analysis and do a good job of explaining it as well. Look at this one here, technical overbought sold composite. You could see it's basically at a record level. The chart goes back to 1998. So imagine we are going into these territories that we had seen back in 99, 2000, back during the financial crisis. We are basically there today. The trouble with these periods of time is that they often end very badly. When you see the extremes, there are corrections that take place. That correction could be 5% in the market, it could be 10% in the market, or it could be 50% in the market. Nobody really knows. Nobody has an idea of what that trigger could be. But certainly when we get overvalued, things come back around. This is the market greed fear gauge, and they have a breakdown here. As you can see, it is more complete than looking, for example, just at the VIX, which is included in here. Right now today, we are in that extreme greed zone. It isn't at the highest it's ever been, but certainly we're basically there. More sentiment extremes. One of the subcomponents of the fear greed gauge is the NAAIM index of professional investors, which measures the percentage allocation to that group's equities. Currently, equity allocations of professional investors are back to full weightings. They are pedal to the metal right now, okay? While such doesn't mean that the markets are about to crash, more often than not, their bullishness has tended to be an excellent short-term contrarian indicator. That's according to them. And this is the way it works. When everybody's moving in one direction, often things might turn around. It just happens that way. Just like when everybody is extremely bearish, the trend can reverse. It might be a temporary, but that's the way it happens. So here you can see on the chart below, it goes all the way back from 2006 up until the present, and we are basically near record levels today. Short-term market timers in the excessively bullish zone. Average recommended stock market exposure among short-term stock market timers. We are right up in there using yet another indicator. Truly historic levels today. There's no doubt about it. A little bit of humor here. You can see that the US Justice Department hits Google with the biggest antitrust lawsuit in 2 decades. Wow, this is amazing. They're really gonna fix it up. They're really gonna put them in their place, right? Does anybody know who funded them in the first place? It is a joke. Don't believe anything that they put in front of you. In the end, you come back 5 years from now, they're gonna be bigger, they're gonna be stronger, they're gonna have more control than they did as I put this video out. Don't let them fool you, please. They are all working together in concert. Robots encroach on up to 800 million jobs around the world. Advances in automation technology threaten a significant share of jobs in industries, accounting for nearly a quarter of the global workforce. This is important, obviously, because they do not have a solution. I know that a lot of people would say you don't have to worry about this because people would just get new jobs, or there's some sort of UBI that comes out, but this needs to be funded. How do you fund it? Well, we're going to tax this, we're going to tax that. But as I have noted many times before, there isn't one example of a good tax. The taxes ultimately get squandered. They're never enough. They have to increase them the following year. They have to increase them the following year. Even though if there's more taxpayers, there's more tax money coming through, they still have to increase it. It isn't a solution here. This is going to be the new reality where we have the evaporation of the middle class, central banks that basically own and control everything, and the public complicit entirely. Thank you, Federal Reserve, for saving us. Thank you so much. Yes, you can buy all of the shares, you can buy all the real estate, as long as you continue to make the sun come up in the morning. I'll be forever grateful. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. Thank you very much for being one of the 10% of people who do that. Much appreciated. If you want to learn how to sell stuff online, I'm talking about e-commerce, you can do so for free in my course, theamazongps.com. Do you want to know the financial system from top to bottom to be able to ask the right questions? Well, you can get the information you need to know in these 2 books. Check out the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? There's so much data jam-packed here. If you haven't, you definitely want to take a look. Click on it. I'll see you there.